Hey guys, what's going on? My name's Adam, and today we're going to be talking about 5 penny stocks and my opinion of them. Okay, and penny stocks generally are stocks that are less than $5 per share, but I'm using this term loosely. Most of them are less than $5 a share, but some are more than $5 a share. Anyways, there's some stocks in here that I wouldn't touch with a 10-foot pole, some stocks that I own, and some stocks that I'm watching. All right, so let's get right into it. Okay, first one, I own this, and if you want, you can check out my previous videos on NAT and why I own NAT. But briefly, I think the future is looking good for NAT because OPEC is easing its restrictions on production. So OPEC is going to increase their oil production, which means that there's going to be more oil on the market, which means that the spot rates are going to increase. I mean, spot rates for their Suezmax vessels are already going up. So I think that's incredibly good news. And again, both the CEO and the CEO's son have bought shares in this company recently. So that means that they probably think that the stock price is going up. I mean, they wouldn't buy shares if they think that the stock price is going down. And again, they obviously know a lot about investing in the oil tanker market. Okay, so that's number one. Let's move on to number two. I also talked about this company on a previous video, Genius Brands International. Now, this company has been the definition of volatile in the recent past, and you can look at the 6-month chart. It went from a stock that's worth 21 cents all the way to 7.93, so close to like a 3,000% return in June, and now it's down 72% all the way to July 16th. Okay, so I mean, if you got in here and made that 3,000% return, good for you. But otherwise, you know, you're out of luck, right? But okay, right now this stock is just a hold or a watch for me. I don't own any shares in this, and I don't think I will be owning any shares in this unless they show that they're able to perform and become profitable. Recently, or this was yesterday actually, they released a shareholder letter saying that. So first of all, this is a multimedia entertainment company that's catered towards children, and there has been a lot of hype because they just partnered with Arnold and to release this sort of series called Stanley Universe, and it's they said that they're going to be distributed by Archie Comic Publications. They call it number one most widely distributed comic book company in the United States. I don't know if that's right, but I guess they could have their facts right. But anyways, look at all this italicized, bolded. Um, it's just like they seem like they really want to push their company to shareholders, and they're talking about how. Let me be clear. In Stanley Universe, we're building out the next Marvel based on creations of the man who built the original Marvel, Stan Lee. And they're talking about how these two guys are collaborating and they're lifelong friends, etc., etc. And I mean, okay, so this is a lot of hype. And this was released yesterday. You'd expect that this news would affect the stock price at all, but no. Um, so another news, another blow to Genius investors. So just a few moments after the CEO of Genius Brands announced an agreement for Stan Lee Universe to be distributed by Archie Comics, the stock actually went down by 0.5%. So this is just showing, and they're talking about how this is a stock that's just being manipulated by day traders, etc., etc. And I mean, if we go back to the shareholder letters, they give a little bit, again, another update. The model for Stanley Universe will be no different than the model for Cartoon Channel, talking about the best content. Again, italics, etc., exclamation mark, good things coming, stay tuned, 3 exclamation marks, including upcoming Cartoon Channel, iOS app, etc., etc. So, I mean, okay, I think, they're pushing a lot of hype on this stock, and I'm not saying that this company doesn't have good things to come, but I think it doesn't deserve a $2.21 price for the stock when it hasn't been profitable, and we're going to look at it hasn't been profitable at all. It's just losing money left and right. And again, it's kind of hard to monetize this, right? So it's hard to discern how much revenue they're going to earn by putting their company, or sorry, their TV series on Netflix or Amazon Prime, right? So again, only time will tell. This next stock I'm more excited about, and it is Planet 13 Holdings. Okay, so it is involved in the MJ space, the Mary Jane space. I don't know how else to say it. I don't know if I can actually say the word because of YouTube regulations. But anyways, you get what I'm saying. So it owns the world's largest cannabis store, steps from the Las Vegas strips. Now this is exciting. One reason why I like this company a lot is because they have a variety of products catered to is more high end MJ, and it has a bunch of brands that we'll look at below. Um, but again, as the legalization process goes on in the states for MJ, I think there are big things to come. Okay, offering an unparalleled customer experience, et cetera, et cetera. So it's a very small company. You can see the market cap of only 240 million. Um, but again, it's rapidly growing. So only six retail distribution uh, stores, and they have a bunch of brands. So largest dispensary on earth. So it's sort of like you walk in and it's like a superstore, but it's like a tailored superstore. You can sit down, um, enjoy freshly brewed coffee, a bite to eat, and see how their products are made. So again, it's a very unique and niche experience, and I think this is what people are going towards, or I think this is what space people are going towards in the future. So even look at like, Starbucks coffee, a very profitable company, coming in toward more that niche market of like, very personalized experience when you walk in to get a Starbucks latte or whatever. Okay, so they're talking about their product. They have vape pen, um, creating the trend, etc. Utilizing cutting edge technology. Um, talking about their coffee, uh, and again, making you feel good but without the high. So CBD isolate and not THC. And they're talking about their Dreamland chocolate. Um, so again, the way that they brand their products, I think, is amazing, and their sales are increasing, and they are expected to become profitable in I think the next quarter. We'll see again with the whole pandemic. I don't think so, but again, that's what they said. And again, gummies. Um, so I like the way that this company is structured, and I mean, right now it has been enjoying a really nice streak, so up 37% since July 3rd. And I mean, right now I don't think I can buy it. I don't own any shares, but I would love it for it to come down to 250. Again, this is in Canadian, by the way, before I purchase any shares. Um, and so if we look at their financials, so quarterly has been consistent in terms of their revenues. Um, but they're still losing money, of course, because it's a new business. They're just starting up, etc. So they have a lot high overhead costs. Um, when we look at the annual cost, so I like how their revenue is just increasing substantially, and also they're making less and less of a loss from 2018 as compared to 2019. Um, and so I think this is good news. Who knows? I don't think I think the coronavirus pandemic will actually impact them a bit in terms of the coming quarter. But again, we'll have to see. One thing I also like to see is where are their shares here. So the amount of shares that they have. So they had 117 million shares. This is in thousands of dollars in 2017, which went down to 95 million shares. So they took shares off of the market by buying some back. And now again they issued shares, and issuing dilutes shareholder value, but it also gives that company uh, more money to work with, more funds to work with, especially when a company is young and unprofitable and needs that money, right? So this is actually a good sign that they bought shares. They probably bought shares at a low price, and when you buy shares, that takes off shares in the market, and that pushes the stock price up because of the principle of scarcity. If there's fewer shares and more people want shares, then generally the price of that share will increase, right? But again, they had to increase the amount of shares that they had on the market to make some money in order to fund all their operations. But again, I think right now this company is just a watch for me. I'm a little bit more of a conservative investor, and I think this has really good potential. And I might miss out on something big, but again, that's just me. Um, Next company is Neo. Okay, Neo has been heralded as the Tesla of China in terms of its EV market. I'm not so sure. I mean, we'll see. So Neo, Chinese name, which translates to blue sky coming. So, originated from our vision of a future filled with blue skies. Um, Again, a very good company, and I think in general the EV market is going to dominate the internal combustion engine market in maybe the next 20 to 30 years. Talking about, environmentally friendly future, et cetera, et cetera. And again, this isn't necessarily a penny stock. It's trading at like close to $13, and it has a market cap of, I believe, like 15 billion. Yeah, 15 billion. So not necessarily penny stock, but still, um, it has been over the past 6 months has been widely traded and has increased by over like 400%. It went from being like a $3 stock to now, again, yeah, being a $13 stock. Even the monthly stock chart you can see here up 80%. Okay, that's huge. And I think there has been a lot of speculative plays around this stock. Um, but there has been good news, okay? And right now, again, I think it's a little bit too overpriced. May not be for you, but I'm just saying for me, it's personally too overpriced. The good news comes from so increasing the amount of vehicles that they delivered from May to June. So in May they delivered 3,400 vehicles, but in July they delivered 3,700 vehicles. So about a 300 vehicle increase from May to June. And then NIO delivered 10,331 vehicles in 3 months and in June 2020, exceeding quarterly guidance. So again, bullish update, and that's part of the reason why NIO rose so much. If we look at the financials, we see pretty good news. So they're losing less and less money quarter over quarter. And I mean, when they look at the number of shares that they have, I'm not sure what. Somewhere in 2018, it seems like they bought a lot of shares here. Um, but again, now they're up to the most number of shares that they had. Again, trying to raise money to foresee their losses so that they eventually make gains. And we look at the annual return. So again, they lost a lot of money in 2018, but again, they're coming back from that, and they're also increasing their revenue from 2018 to 2019. So again, good news for NIO, and I do think they have big things to come. Is the next Tesla of China? I'm not sure. I don't even know if you can compare those two companies. I might have to do a bit more research, but as of right now, I don't feel comfortable in investing in a 15 billion market cap that has no profits as of late. And if we look briefly, again, the reason why the share price surged of NIO, because after it reported second quarter sales results in early July, um, so the company said that its vehicle sales in the quarter had nearly tripled from a year ago, up 191%. Okay, so I mean, that's definitely a valid reason why the stock increased, but I don't know if it's necessarily uh, is good in terms of their market cap, and they're just losing money, right? So again, right now is for a watch for me. Okay, so this last stock is kind of a joke stock. I wouldn't touch it with a 10-foot pole. It filed for bankruptcy. I think you might all know it's Hertz stock, okay? So it used to be a $20 stock before the pandemic, and it lost 92% of its price from there. So right now it's sitting at a market cap of $204 million. You can buy it at $1.44 per share. I mean, I don't know why this is trading at even above a dollar right now. We look at the month price. Again, largely speculative right here, but I think this is going to go to zero. Part of the reason is that, so one of the core issues with the Hertz business model is stated right here, so that it does not own any of the cars in its fleet, so they just lease them out. So special purpose entities hold these cars, which are owned by fixed income investors. So the company's asset base is weak. It barely has any assets, right? And it carries above $1 billion in debt and $13.5 billion in third party debt. Okay, so it's currently generating zero revenues with obligated cash expenses of 100 million per week as per its recent filing. So they try to basically um, put out some shares at the current market price to raise 1 billion to fund them through this. But I mean, I think they're going to need way more than 1 billion, especially if they have obligated cash expenses of $100 million per week. Okay, that's insane, right? So yeah, they talk about like they filed for bankruptcy, and looking to raise money through selling stock. again, which is going to be, in my opinion, and in this person's opinion, be worth nothing in the coming months, right? So they tried to issue stock, but they didn't do that because they followed criticism from the SEC. Um, okay, and so now they have to swallow the bitter pill of taking up a $1 billion loan to fund its business reorganization. Okay, so it needs cash, and it needs cash quickly, right? So they need $1.28 billion to meet its obligation through the week of August 21st, right? So I mean, look, there's a lot of uncertainty surrounding Hertz. And I mean, this is right now a failing business model, especially in the current pandemic. And the pandemic is maybe soon over, but that doesn't mean that traveling is going to revitalize as soon as the pandemic is over, right? So, due to its obligations, and it's just going to have to keep on taking more and more loans. Again, I wouldn't touch this at all. I'm not going to touch this. I implore you not to touch Hertz Holdings. I think this company is going to zero. Um, but again, hey, there's a lot of speculative investors who feel like losing money, so let them lose money. Okay, so these are just my opinions on these 5 stocks. So NAT I own, GNUS again right now is just a watch for me, but I don't think I'll buy it in the near future or in the long term future. Planet 13, I want it to be below 250 Canadian. I really like the company. Neo, again, is just a watch for me. I might buy it if it goes below $10, but again, we'll see. They do have good sales, and I would not touch Hertz at all. All right. So let me know what you think of these stocks. I hope you enjoyed watching this video. Please like and subscribe, and have a fantastic day.